there's a lot of growing kind of negativity around AI, and that's understandable. Many of these deals are, what's the word? It's incestuous. It's a, it's like I've seen people talk about like a power cord plugging back into itself, right?
Right.
Nvidia is gonna give $100 billion to OpenAI, which they'll use to buy Nvidia's chips. We are seeing a lot more of those kinds of deals being struck right now. So I am entirely sympathetic.
I want to put a little bit of voice to some of the concerns that people are seeing, and then I'd like you to talk about the specifics that are leading to that. So maybe go in reverse order here a little bit. But it's a little dizzying right now. And you talked about, the power cord plugging into itself. I've also seen this referred to as the Ouroboros economy, right? Which is like the snake that eats itself, and you're not sure where it starts and where it ends. It is a little confusing, and there's major concerns now about what's called circular investments, and these rhyme with the dot-com bust and vendor financing and what happened in that era. And just one example of sort of companies in this, what was sort of this self-funding and closed cycle where, revenue was going from one company to the other, and then those companies were trading at a multiple of revenue so they could raise more money and then use that money in the infinite money machine again. Is in the dot-com bust, there were advertising barters with portals like Yahoo, where companies would exchange warrants for advertising without revenue changing hands. There were a lot of other versions of this, but it all comes back to this concerns about circular investments that rhyme with the dot-com bust and vendor financing. So I think that there is definitely some validity to these concerns, but there are truly things that are substantially different about it. And we're going to talk about that. One of which is what we've discussed, I think 2 episodes past, that this is largely a cash flow funded cycle up until this point. These are companies that have real material revenue. And while there are a minority of companies that are currently deriving revenue from AI, those that are the mega tech giants who are generating billions of dollars of free cash flow and efficiency gains. I mean, look at Meta, right? Their return on invested capital has gone up from 2021 to today, largely powered by AI investments. And that's happening at other companies at scale. So there are truly different things here. There's real revenue happening. These are cash flow funded cycles. And yet the structure of a lot of these deals does need to give you pause to evaluate it a little bit. So I want to say that, like, that's why people are concerned. But now let's actually talk about some of these actual deals that are leading to that concern.
Yeah, so just I think most people have heard about these deals, but we should lay out what exactly is happening. So the big one was NVIDIA announcing a $100 billion investment in OpenAI, and it was followed shortly by OpenAI announcing a commitment to buy $100 billion worth of chips from AMD. And what does OpenAI get in return? Well, pursuant on some kind of thresholds for performance, they would get $100 billion worth of AMD stock back. So let's just dive a little bit into this. The AMD agreement would be for OpenAI to purchase 6 gigawatts of chips, and that would begin with a 1 gigawatt purchase in the second half of 2026. So you look at 6 gigawatts in terms of revenue to AMD, that's going to be estimated somewhere in the $90 to $100 billion range. As the deal scales, OpenAI gets warrants to purchase AMD stock that caps out at about $600 per share. Austin, when you do the math, it is essentially 1-to-1, right? It is that $90 to $100 billion worth of chips, and the stock value at a $600 price level would be $96 billion worth of stock. So this is essentially a 1-to-1 relationship. Now, NVIDIA and OpenAI, their deal was announced on September 22nd. And in that deal, which is phrased as a strategic partnership and that matters, NVIDIA is investing up to $100 billion in OpenAI. And the commitment from OpenAI is 10 gigawatts of NVIDIA GPUs. So a lot of people might look at that and go, oh, well, NVIDIA is giving them a 1-to-1 dollar, if they did the math I had for AMD in the last one. But the actual math here is a little different. And for 10 gigawatts, you're talking $50 to $60 billion per gigawatt. So in terms of that build out, NVIDIA is paying about 15 to 20% in the form of, getting equity back. So this isn't, NVIDIA paying for all of this build out, but it is some portion of it. So Austin, let's just first highlight the key points and then we can follow up with some, I'm sure you've got a number of follow-up questions here. But the key points, number one, This is now the second episode in a row where every major storyline is driven by OpenAI. Last episode,
Right.
it was Oracle, right? And also Broadcom. This episode, it's NVIDIA and AMD. But Austin, a bigger point is everything downstream in the investing space is basically coming from OpenAI right now. Taiwan Semiconductor, we've talked about them being an excellent position for any investor to add because of how they serve as kind of the original arms dealer. They're up 22%. Who's their customers? AMD and NVIDIA themselves. Memory stocks are absolutely booming right now. Austin, we talked about one of our number one trends at the beginning of the year being memory and a boom happening there. It went through a trough of disillusionment. And now, as we're seeing this boom in capex in the second half of the year, memory stocks are absolutely taking off. Micron's up 45% the past month. SK Hynix is up 43%. And Austin, the other area that's finally getting unstuck, we've talked a lot about limiting some of our exposure to the machines that make chips, semiconductor equipment, because there was other overhangs over to that top of that industry. Well, those overhangs right now are kind of being ignored because people are doing the math in terms of the amount of equipment that's going to be needed for all this build out. And we see a stock like Camtech, which was one of our recommendations up there, up 44%. Lam Research, another one of our kind of best of the best that we had selected from that industry, up 42%. So Austin, basically right now, even if you're not invested in NVIDIA, even if listeners are not invested in AMD or Oracle or Broadcom, what your returns are driven by is the ambition of OpenAI. So,
Right.
Whether or not you like it, right now your portfolio is essentially seeing its performance driven by one single non-publicly traded company. That's fairly
Right.
remarkable.
And one incredible deal maker in Sam Altman. I mean, I don't know how that guy, it seems like he's in five places at once, signing deals left, right, and center. So, real credit to him for building a visionary, incredible company, and then also just being a phenomenal deal maker and capital raiser when it's needed. I will just say, I do have some questions on this because this brings to mind some really big questions about the implications here. This is the first moment for me where I've started to get a little concerned, not about the technology of AI, not about the investing potential, but the market structure of this just being OpenAI is this one pillar tent pole that props up, more or less this whole industry and sentiment right now. Like, we need to see OpenAI succeed, right? If OpenAI has any sort of hiccups or concerns, there's no other company as consequential as them to sort of like continue to move this enthusiasm forward. And that's to say nothing of the long-term potential of AI, but I get a little nervous when one company has this much impact on investor um, optimism, energy, enthusiasm, whatever you want to call it, right? I would much rather this sort of be a industry where a thousand flowers can bloom, and really what we're looking at is trying to plant one mega sequoia tree right now.